Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Marion Gilman.
And we're here to provide you with some financial advice in a language you can understand. Well, we're a few weeks into this war overseas, and it's certainly taking a lot of the time and attention of everybody these days.
Absolutely. And that's what's in the news. That's what's prominent. And gas prices are going up.
Gas prices are up. But, you know, people are asking, are you fielding calls? Yeah, we're fielding calls. Is it any different from what we're used to, Marion?
Not at all. No. And, you know, again, I think we've stressed this so much on this podcast. One of the things that we attempted to do with each and every client is have a financial plan that can withstand these ups and downs in the market.
Yeah, I mean, we have predicted for decades in this business and have stated on several occasions that the markets just don't go in one direction. And they can move for a variety of reasons.
Absolutely. And in general, a 10% decline in the market is something that we see every year, once, sometimes even twice a year, because that is just a normal market movement.
Wait a second, did you say a 10% move?
Correct.
But how much has the market moved? Is it 10%?
Oh, no, it has not been 10% yet. I'm just giving an example.
Right, but the point of the matter being...
It's minor right now.
...is that despite the headlines, despite the news stories that are out there, and despite the fact that we've seen the portfolios pull back a little bit, it has not even been close to any of the instances that we've had over many decades. In fact, just go back 1 year. 1 year ago, about this time, the market's dropped 12%, and as of this recording, we're off about 4% from its high.
Right, and 12%, pretty rapidly it dropped as well.
Do you remember why last year?
It was interest rates, no?
No.
It wasn't interest rates, what was it?
No, last year was the announcement from Donald Trump to do reciprocal tariffs.
Yes, of
and
course.
he saw those, and everyone thought, oh my goodness, everything's going to cost so much more money. And it shocked the market.
Absolutely.
Now, did that really happen? Did the prices go up as dramatically as they thought?
No.
Was it an over-exaggeration? Was it a bunch of I shouldn't say nonsense, but it was a bunch of bluster, I guess I'll call it. But the market reacts to that. The markets move on all of these little sound bites. And it moved it's precipitously downward very quickly. And then once people realized it was not that big of a deal,
right,
the market moved up, and then up some more, and then up some more.
And I expect that we're going to see the same thing with gas prices, because they have already taken some steps. I mean, they've released some of the reserves in the United States, so you know we actually have plenty of gas. The other thing they have done, and oil, correct? Sorry, and the other thing that they did the most recently is they're allowing foreign ships to go between ports in the U.S. And there's some, do you know the name of that? I can't remember what it is, but it was some law that prohibited foreign ships from going between U.S. ports to deliver
this was something
oil.
that was announced yesterday.
That's
I forget
correct.
the name of this.
Yes, exactly.
But let's take this back even bigger before we get into the minutia here. Think about this. Well, did you want to say something?
No, I was just, no.
When she takes her hands like this, I feel like there's something coming. So think about this. In the United States, we are net exporters of oil and gas.
Correct.
Okay? What that means is that we have enough energy supply to support the United States and sell some of the excess to other countries.
Correct.
So all of this, look.
Part of the problem was simply moving it around.
Right.
And that's what was creating some really high gas prices, particularly in places like California. So this latest move that they took given the increase in gas prices, and that's all, I think that's the theme. There's always a reaction to help alleviate the pain.
There is. But everybody now knows where the Strait of Hormuz is.
And who knew?
Who knew? I mean,
Right.
I mean, unless you were really following the war back when we attacked Iraq, when there was the Afghanistan war, when you really talked about the Persian Gulf, we talked more about the Persian Gulf, but no one really talked about the Strait of Hormuz, or what is it, Craig Island, something like that. And forgive me that I don't know all of my geopolitical terms and all of that, but what we've seen is this cluster of ships that take most of their oil from Iran and deliver it to other countries. And it's being bottlenecked right now as it goes up and down this channel way, which you've seen probably on the news.
Right.
Now, does the United States need any of that oil? No. But the world does. And so many people ask also, so why are gas prices going up? Well, gas prices are going up because we do import a lot of goods. And a lot of the goods that we import require petroleum. They require the oil, the energy that's necessary to make these products.
Right, and also to power the ships.
Right, and if you need that stuff to manufacture, that's going to raise the cost of goods.
Exactly.
So, and the reason that the cost of goods are up right now is because there's a bottleneck right now at the Strait of Hormuz, and Iran is making it very difficult for ships to pass through. Now, we can read all sorts of stories that say they're freeing and allowing some countries to go through and not others, but the bottom line is this. We are in the midst of a war. The United States and Israel have attacked Iran pretty heavily. They've taken out most of their major operatives. They have air supremacy over Iran and have really demoralized most of their military equipment. However, there is still some that remain. And the missiles that remain and the launchers that remain pose a risk to ships still passing through that way.
Exactly.
At some point in the very near future, there is going to be, I don't know, a territorial assignment of allowing for these ships to pass through without fear of getting bombed or blown up or whatever.
It hasn't happened yet.
It hasn't, right. It hasn't happened yet. And when things like this happen, it creates uncertainty. And markets, how do they feel about uncertainty?
Uncertainty is the worst.
It is.
Last year it was tariffs. This year it's oil and gas and how that's going to get around. What has happened, though, in each and every case is the administration or other countries have taken every effort and every way they can possible to alleviate some of the pain.
Yeah.
And
they're doing what they can.
Exactly.
This is a short-term pain.
Right. It's a little bit longer than the 2 weeks that
we knew it wasn't going to be 2 weeks.
Of course we did.
Because,
of course we
look,
did.
Iran is a very resilient group of people. They face hardships and they face wartime conditions all the time. They are prepared to fight to the very last person. And the United States, Israel, and any other allies that join us need to be prepared for that. There will be more casualties. There will be, look, take any situation where you have lost faith in anything. Your whole character has been ripped apart. You will do anything that you possibly can to try to save it. And you will become radical. You will become chaotic. You will become irrational. Right. And that's what we're dealing with right now of what's over in Iran. And so until that smooths itself out, and it will, there's going to be some bumpiness along the way.
Absolutely, and it shows up in the form of stock market volatility. I mean, that's the bottom line. That's where we, vote with our money, I guess.
Well, and so how do you respond, Marion, to people who say, well, if you know this is going to happen, and you know that the stock market will continue to be volatile, why don't you just get out?
So the problem with why don't you just get out, number one, we're already down, correct? From
down
the highs.
5 or 6%. Oh, yeah.
No.
Okay, we're down.
So we're getting out at a price that's lower than what it was. We never know how low this is going to go, nor do we know when it's going to turn around. And that's one of the key criteria. So how do you get back in order to capture that upside? Because typically, once things turn around, as we saw last year pretty clearly, the market just, boom, has this enormous boost in a day or 2 days. So you need to get back in. Are we able to do that? We don't know. We don't time the market because it's never been done successfully over any length of time. So we leave it to the mutual fund managers, the exchange traded fund managers. They make those decisions for us as to where to position the money. We do not get in it.
Yeah, so also let's put this thing into perspective also. We've been here, we've done that. We've been through wars, we've been through COVID, we've been through financial crisis, we've been through terrorist attacks, we've been through all sorts of things. And as much as the market has fallen during those uncertain times, what has come to follow? A market that goes up further. So I generally try to ask this question: do you believe the market will be higher than where it is right now, 3 years or 5 years from now?
Absolutely.
And if your belief is yes, why bother to try to speculate in this market? Build a portfolio that is well allocated, understanding some things are going to go up more than others. But over time, it all melds itself together, it aligns itself with your financial plan, and you get a result that smooths out the edges during a rough and rocky period of time.
And what we always stress, if you're going to need money within the next year, you have money that you're going to need and you're going to be using within the next year, year and a half, maybe even 2 years, it shouldn't be in stocks anyways.
No.
That's the bottom line. So for those of you living off your money who say to us, because this happens, oh, I'll never see the market, I'll never see the same, I'll never see it grow again, I'll never see it recover the losses. Most likely you will, as long as you stay around for a couple more years. And also, we make sure that the resources are there to cover any expenses that you're going to need in the next year or two, and they're not in stocks.
Yeah. And I also want to step back here and put a few other things in perspective. Over the past 3 years, we've had a great run-up in the stock market. 2022 was a negative year, probably negative in the teens for many of our clients.
Right.
But 23, 24, 25, we're great, high single digits, low double digit returns, very low double digits, like teens returns, which is amazing. And how quickly we forget that we've gone through both hills and valleys during those first 3 years.
Right.
However, many of you have just done your taxes. And you've called the office, or you've called your financial advisor, or called someone to say, hey, I was just floored by the call I got from my accountant because I owe so much in taxes. Now, in many cases, it's because you had some capital gain distributions, extra dividends, perhaps you traded your securities and created capital gains. Those things are taxable, but that's generally a result of you making money. And so if we were to sell out your portfolio now, I'm not suggesting we're doing that. We have not said that at all.
You're right, that's the other.
So what are you going to do with all the gains? Do you want to pay taxes on all of those gains? Yes, I know it doesn't apply in your IRA and your retirement accounts. But in your personal investment accounts, do you want to pay taxes on all of that? And all of a sudden, when you show that picture, they go, oh, wait a second. Maybe I don't want to do that so much.
Right.
Let's try to be rational during these emotional times, uncertain times. That's what we do.
Right. And you have to be prepared. Make sure your portfolio allocation is in alignment with your risk tolerance and your goals.
It is.
Very, very simple, but not easy to do all the time.
And as hard as it is, and my wife, Laura, says to me all the time, how can you stand not looking at how much our account grew or shrank each day? Laura loves pulling up the value of the account to see how much money we made this yesterday or the day before.
Don't do that.
I said, stop doing it, because you will have great days, you'll have lousy days, you'll have moderate days, you'll have everything in between. But you start doing that, and it creates the anxiety that plays into the media, plays into the conversations you have in the workplace, with your family, at your church, wherever it is. Just stop looking. Take what I call the Rip Van Winkle approach. Just let it be.
Absolutely.
You set up a strategy to help you achieve a long-term goal, not a speculative short-term goal, knowing full well there are going to be ups and downs. And no, I mean, when you invest in mutual funds or in exchange-traded funds or index funds, someone will say to me, well, can I lose all my money? Could that happen, Marion?
Well, I always tell people that in order for that to happen, every company in the United States would need to go out of business.
Worth
Bankrupt.
zero.
Worth nothing. And then when you look at the bond, and when you look at bonds, the U.S. government would also have to default on their bonds in order for everything to go to zero. Not only corporate bonds, but U.S. government bonds. And at that point, you're not going to be concerned about your money.
No,
I can
it's an
assure
end of the
you.
world
It's
situation.
an end of the world, right?
And I don't think we're even willing to consider living in a world like that.
No.
Because the likelihood, despite what they might show you on TV and the movies,
Not pleasant.
it's not pleasant, but not likely to happen either.
No.
We remain extraordinarily optimistic, recognizing full well that there is volatility every day in front of us, and will continue to be volatility in the years, the decades, the centuries to come. Stay invested.
We've always been a resilient nation, and that's not changing today.
And that's what we call financial advice in a language you can understand. If now's the time for you to get serious about your financial planning and investment management needs, if now's the time that you say, maybe I'd like to get a second opinion, maybe I'd like to explore a bigger picture relationship with a financial advisory firm, give us a call.
And you want to have somebody to talk to keep you in the market.
Yeah, not an 800 number.
Right.
Our website, freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. Go to the bottom of any page. You can put in your name and your email address and sign up for our free weekly newsletter, which this week included a link to the webinar that we ran for all of our subscribers that expanded on this type of a talk. What are we doing during these war-driven times?
Right.
So that's going to do it for us this week. Have a wonderful week, everybody. We'll see you again next time on Dollars and Cents with Freedman Financial. Have a great day.
Enjoy.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.